471% one morning. That is what CXMT did on its first day of trading in Shanghai. While new shareholders in China were counting their gains, something else was happening across the Pacific. Micron down 5, SanDisk down almost 11, the entire US memory sector bleeding red on the same day. The 2nd of March Kets, same industry. Two completely different stories. That is the story I want to tell you today. Not just about an IPO, about what happens when the market gives you two narratives at the same time and forces you to pick one. Let me take you back to where this started. Because every stock has a story, and this one begins in 2016. 2016, Hefei, China, a guy named Zhu Yiming starts building DRAM chips from scratch. At that point, the global DRAM market had exactly 3 players: Samsung, SK Hynix, Micron. That is it. 3 companies controlled the entire world's memory supply. And here comes this 4th guy in a lab in Hefei, trying to crack a club that had been closed for decades. The first few years, painful. In 2023, CXMT lost 16.7 B in a single year. That is roughly 2.3 B gone. They kept burning cash. 2024. Another loss, 787 M yuan. Most investors would walked away, but they didn't T. Then, AI happened. Here is the part that actually matters. Samsung, SK Hynix, Micron, all 3 of them started shifting their most advanced production capacity to HBM high bandwidth memory, the stuff that goes into NVIDIA GPUs. That shift created a gap in standard DRAM. Commodity memory, the boring stuff that goes into every phone, every PC, every server on Earth. And that gap, it opened up right in front of CXMT. Fast forward to early 2026. First quarter net profit 33 B in 3 months. From losing 16.7 by year to making 33 bin a quarter. That is not a turnaround. That is a slingshot. The 27th of July 2026, IPO day. Offer price 8.66 yuan. Opening price 49.50 yuan. Up 471% before most people finish their coffee. Market cap 3.31 T, bigger than Industrial and Commercial Bank of China, the largest company in the entire Chinese stock market. On its first morning, 9.4 M people tried to buy in. Less than 50% got allocated any shares. Now, here's where the story gets interesting for us. Last episode, episode 52, I told you about missing NVIDIA as 21 times run. The regret, the lesson. And I ended by saying chapter 2 is always about following the money. Well, today, the money went somewhere very specific. It went into memory. But here is the twist. The money that flooded into CXMT this morning, it didn't lift Micron, it didn't lift SanDisk, it didn't lift anything in the US memory sector. In fact, it did the opposite. Let me show you what I am seeing on my screen right now. Micron daily chart, trading at 920.95, down 5% on the day. Now look at the structure. Long-term trend line at 708. That is nowhere near being tested. The stock is well above it. Mid-term trend at 909. Price is sitting just above that, but the short-term trend, 942, price is below it. The stock has slipped under its short-term momentum line resistance, all the way up at 1084, support way down at 448. So there is a lot of room between where price is now and where the real danger zone starts. But the direction today, not good. Zoom into the hourly chart. This one, even more telling, price at 921.37. And look at that number. The short-term trend line is also at 921. Price is literally sitting right on it, like a climber who lost his grip and caught the last ledge. Above that ledge, midterm trend at 951. Below it, support at 883. The bounce low today was 894. So price found a floor above support, crawled back to the short-term line. And now, it is testing whether that line holds as a floor or cracks as a ceiling. This is the moment that matters. The next few hours, maybe the next few days, tell you whether this sell-off is a shakeout or the start of something worse. But Micron is even the worst story today. Not even close. SanDisk down 10.79%. almost 11% in one session. Price at 1437. Look at that daily chart. The stock crashed through both its short-term trend at 1613 and its mid-term trend at 1649. Only thing still holding is the long-term line at 1271. This is T in normal pullback. This is structural damage on the daily chart. Someone sold hard, and they didn't care about the trend lines when they did it. The Philadelphia Semiconductor Index, SOX, down 4.25% at 11,819, also below both its short-term and mid-term lines. This is T, just one stock having a bad day. The whole sector got hit. So here is the question I keep coming back to. What does this mean? And I want to be honest with you. I've been here before, not with this exact setup, but with the feeling. Back in 2021, I owned a bunch of semiconductor stocks right at the top. Earnings were incredible. Guidance was stellar. Every analyst had buy ratings. And then the rotation hit. I remember watching red day after red day and telling myself the fundamentals haven't changed. They hadn't, but the price didn't care. Cyclical stocks teach you the same lesson over and over. The best earnings report often lands on the exact day your stock peaks. Not because the company got worse, because everyone who wanted to own it already did. I am not saying that is what is happening here with CXMT and US memory stocks. I genuinely don't know yet. What I am saying is, when a sector drops 5 to 11% across the board on the same day a competitor IPOs halfway around the world, you don't rush in. You don't panic sell either. You wait. You read the tape. You let the price tell you whether this is opportunity or obituary. CXMT at 308 times trailing earnings on its IPO price. Micron trading at roughly 22 times. One of these is priced for perfection. The other is priced like the market is sure the story continues. Today, S-move tells you which narrative won the morning, but mornings are short. What matters is where these charts close in a week, in a month. That is when the real story gets written. A great company and a great entry point are two completely different things. The market almost never offers them on the same day. Your job is to know which one you are looking at. Every stock has a story. This one, S still writing itself, and I'll be watching. If this kind of deep dive storytelling helps you read markets differently, subscribe. I've got more of these coming. And if you've ever held through a day like today, drop a comment. I want to hear how you handled it.